When you're building business credit, what's the right way to get business trade lines? Even more important, what's the wrong way to do business trade lines that can get you trapped and can actually get your credit profile shut down? That's right. We're not used to this in the consumer world, but in the commercial world, if they don't like what you're doing, they literally terminate your credit profiles. We don't want that to happen. So what's the right way and the wrong way to actually add business trade lines and get business trade lines for a business? That's exactly what we're going to dive into today as we continue our quest talking about how to build the perfect business credit portfolio. Before we dive in, I want to remind you that July 19th, there's a very special event called the Funding 30 Challenge. Make sure you go to funding30challenge.com to learn more. We're bringing in 20 of the world's top funding experts, and they are going to reveal 30 of the top programs for funding right now. So if you think you can't get a loan, if you want to get a loan, a credit line, you want to come here because the actual funding sources will all be there. We're going to talk about grants, angel investors, venture capitalists, actual lenders. They're all going to be there actually issuing money. During our last event in March, we had a lot of people secure funding, and you can actually see their approvals on the funding30challenge.com website. So make sure you check out funding30challenge.com. It's 100% free to take part in the challenge, and the challenge is, do you get 3 different funding options that will work for your business. Challenge takes place July 19th through July 23rd, 2021. So make sure you check it out at funding30challenge.com. Okay, so last time we did training this week, we talked about great starter vendors. We talked about building your credit portfolio. Then we talked about how to actually start the business credit portfolio using vendors and being able to start credit profile with minimal frustration. So today we're going to be talking about trade lines. We're going to talk about understanding the reporting of these credit lines to the business credit reporting agencies, myths and misconceptions about business credit that a lot of business owners think that hold them back. I want to break down those barriers so you know what's really possible so you can succeed quickly with getting high limit accounts for your business without a personal guarantee or credit check. We're talking about the wrong way to build business credit. All the shortcuts people try to take that end up not being shortcuts, cost them a ton of money, a ton of time, a ton of frustration. I'm going to give you reveal a lot of that so you can avoid those kind of mistakes. And we're going to talk about how to do this the right way. So again, you can get really good results and get them very, very, very quickly. DeAndre says, let's go. I love it. And don't forget, make sure you tell me where you're coming in from. So I always like it when you give me an idea of the city, state you're from, just so I can give you a shout out. Okay, so understanding business credit reporting. What is a trade line? Very important. So trade line is a credit industry jargon for a business account or credit line that reports to a business credit report. That's what we call trade line. You'll hear me refer to trade lines, payment experiences all the time. It's basically the reporting of an account to an actual credit reporting agency. And it shows the data of that account. It shows this kind of information. It shows the date that account was open, shows the payment history on that account, shows the last time that account was actually used, shows the high credit limit the high credit somebody's used on the account, the balance that's owed, and the actual term and the date reported. So this is what we see on a trade line on a typical business credit reported account. So we see the date it opened, we see the history of that account, the last time it was used. Very important. It shows you the importance of using the credit that reports on your report, not just using it once and never using it again. Shows the balance and also shows the high amount of credit you've recently used. Again, another indicator that using the credit you're getting is very, very important. And of course, the date it was open, the term as well. So one trade line is one reported account. They can stop reporting if it's not being used. So there's a very important thing here. First of all, if you deal with a company and they sell multiple products or services to you, that company can only ever report one trade line for you. That's how the business reporting agencies work. So let's say that I go to a company and I get it doesn't even matter. I get a product from them, I get a service from them. Well, they can't report my payments on both. They can only report once to the reporting agency. So one trade line is one reported account, and one credit issuer is only ever really going to be able to report one trade line. Now, they can stop reporting if it's not being used, and they will. Now, the actual formula for the bureaus for this is that you want to use the credit at least every 12 months. Or it won't show that it's recently been used. But I suggest every 6 months you touch that account so it just brings it up, it kind of updates it and shows that the account is actually being used. It's very important because credit issuers don't want to give credit to people that aren't using it. And I'll give you an example. In the 2008 mortgage crisis, a lot of us had credit limits on our credit cards reduced dramatically. And here's the reason why. These banks were so overextended. They were extending massive credit card limits and credit lines to individuals and businesses that weren't using them. So they'd have $50,000 in credit issued into credit card for somebody that was only ever using $1,000 of that 50. Well, that 50 is money they have extended that's not being used. They could extend to other people that are actually going to use it. So they reduced a lot of the limits from individuals and businesses because the credit wasn't being used. It's very important because you got to use the credit that you're actually given. If not, you have a chance of it not being reported, or even worse, the actual limits being reduced because the credit issuer knows you're not using them. So trade lines are the individual records of the credit lines you have available. They are credit accounts, which is why utilities typically don't report and why they're used to determine your eligibility for this form of credit. So we don't see utilities report on business credit reports. There was a company called eCredible that tried to do that and did not do it successfully. Okay, so we typically see revolving credit, we see car loans, we see bank credit on credit reports. So each one of these accounts is a credit account. It's a trade line. It's actually being provided, if we talk about terminology, by a trade vendor. So this is some of this terminology we're used to. It's a trade account. It's a trade vendor being reported as an individual trade line on your business credit report. Now, there are multiple types of trade lines that can report. Vendor credit lines, these are from vendors, from Uline, Quill that you use to start building business credit, to a Staples, Office Depot, Sam's Club, Costco, just stores that offer you credit lines. Those are called vendor credit lines, as we talked about, or vendor lines of credit, as we've actually, vendor credit lines, as we've talked about over the last couple of weeks. There's also business credit cards, Visa card, MasterCard, Amex, Discover type credit cards. There's also bank credit lines, an actual credit line issued by a bank. There's vehicle loans. There's installment loans. Okay, so these trade lines can rapidly help businesses build credit just by using them. So these are the type of typical credit trade lines that we see on business credit reports: credit cards from vendors. We see these credit lines. We see installment loans, vehicle loans. This is most of the type of credit you're going to see on an actual commercial credit report. Katrina checking in from Chicago. Thanks for tuning in. I appreciate Barbara watching from Florida. Barbara, hopefully you were okay to navigate the storm. I slept through the hurricane apparently last night. And Carlos, can't hear you. Hopefully everybody else can hear me. If there's any other kind of audio issues, let me know. If not, Carlos, I think that issue is on your end. So you might want to get out of this and come back in because it seems like I don't have any other audio issues from what I'm hearing. Okay, so no payment history equals no data to report. So you've got to have payment history. You've got to actually get credit, use the credit in order to even have a history that can be reported. Now, trade lines might report to any of the three major reporting agencies: DMB, Equifax, Experian. The other day, somebody asked me, they said, hey, here's this obscure credit bureau. You don't talk about them. Look, the reality is, in the consumer and commercial credit space, there are thousands of other credit reporting agencies out there. So when we look at Equifax, TransUnion, and Experian and the consumer credit reporting agencies, if you look at their history, they have literally gobbled up thousands of regional credit reporting agencies. And there's plenty of others that get started, right? Like banks. Why do all these banks get started? Because they know that big banks will come in and buy them if they prove their concept. It's the same thing. These small credit bureaus get started all the time because they know that if they prove concept and they get enough data, that the big guys will gobble them up. Okay, and we talked about eCredible earlier. That's, for example, one of their strategies. You have enough data, then these guys come in and get gobbled up by the reporting agencies. So DMB, Equifax, Experian, these are the three major reporting agencies. There's CreditSafe, there's plenty others. They're just not commonly used by a lot of lenders and credit issuers, which is why we don't talk about them a lot. Now, not all trade lines are reported on each bureau. You have to have a strategy. 97% of trade vendors, for example, don't report the credit that they're actually issuing. So you got to get credit with actual sources that do. So let's talk about myths and misconceptions. Some people think that just because you have an EIN, you have a credit profile, but that's actually not the case. You've got to actually go through and get credit that reports to all three reporting agencies, or they have to know your business exists to even create credit profiles for you. And by the way, you don't want that to happen. If Equifax and Experian know you exist and they create a credit profile for you and there's no accounts reported to them, they'll give you failing credit scores to put you into a very high risk category for lending. If lenders and credit issuers see that, you will get denied. You will get credit lines pulled back. There's all kinds of bad things that will happen. So we don't want credit profiles to automatically be created for the EIN. We want to supply good trade lines, good paid accounts to the credit bureaus to get them to do that. If not, and they even do create a credit profile, then the problem is it's not a good credit profile because we have no credit reporting. Okay, a lot of people think just because you make payments that you have good credit, but the reality is 97% of the vendors you're paying don't report the credit to the reporting agencies. So you can't think that just because you have credit, you're paying as agreed, that you're building business credit. Okay, one of my really good friends, John, had this exact same problem. He owns a very successful media agency. What happened was his bank issued a credit line, and they sent him a notice saying, the credit line is due. We want our money back that's outstanding on the credit line. We're shutting it down because your business credit has issues. He came to me in a panic. He said, I haven't even done anything to ruin my business credit. We pulled it. He had no credit on his report. He said, how's this possible, Ty? I spend millions of dollars a month on media from all these different companies out there that are really high reputable media companies. I said, but none of them report the credit they're giving you to the reporting agencies. So what's happening is nobody's reporting credit. Now the bureaus know you exist. They've created failing credit profiles for you. And now your bank and everybody's pulling back. The only way to offset that is to build credit profiles and scores the right way by adding positive trade lines, which we're going to talk about today. So you got to get credit with sources that report. Remember, 97% don't. A lot of people think I'm approved for my first 4 or 5 accounts, so I can apply for more right now. Well, you can't do that. You got to go through tiers of credit building. And if you go through the right tiers of credit building, then what happens is you can move from tier to tier. But if you only get a bunch of accounts in one tier, you can't just move to the other tier because you got them. You got to use those accounts. You got to pay the bills. You got to let those accounts actually get reported. And by doing so, that is what's necessary for you to move on to other tiers. So just because you get a bunch of accounts and you go get a bunch of starter vendor accounts doesn't mean that you can actually make it through and start getting approved for a lot of retail credit right away. And here's an example of this. This is the business finance suite. This is the system our clients use to take 3 years of business credit building and condense it down into only 6 months. They work with our advisors to go step by step through this process. You can see how we've helped 50,000 people through this process. We tier what to apply for in which stage. And if you don't have enough accounts to get to this stage, you can't be applying for accounts in this stage. We even gray out sources like you see here. These are grayed out. We're not recommended. You don't have enough trade lines to even get these sources yet. So we put in all these safeguards to tell our clients, hey, look, you got to have this many trade lines to even move to this step. This is grayed out. It's not recommended. You don't have enough trade lines. Warning, warning, abort, abort, stop, stop, stop. Because when you have enough trade lines, then you can successfully move to the next tier. But again, to move to the next tier, you have to have a certain number of reported accounts. So here, as you get more reported accounts, then these open up. Now you can get them. They're recommended because you can actually qualify. So you just got to keep this in mind that you want to make sure that you're not just moving from one tier to the other until that other credit accounts actually get reported. It's very important. Okay. And if you do that the right way, you get better terms, easier qualifications. It's just easier to get approved for the next tier of credit. So look, I say this a lot. Our clients build business credit in 6 months and take a 3-year process and condense to 6 months. How do they do that? They're only applying for credit they know they can get. It's as simple as that. If you look at our system, from our advisors advising the accounts to go to us saying, apply for this tier, don't go to the next tier until these accounts are reported. You need this many accounts to get to that tier. Graying it out, not recommended, don't apply for this. It's all based to do one thing. One thing is only apply for accounts you know you're going to get. If you do that, then you could move through the tiers quickly. But if you don't, you're trying to jump tiers too quick, then you just get denied. It's just a colossal waste of your time. Okay, I have an 80 paydex score. I can get what I want. A lot of people think that as well, but the reality is an 80 paydex score literally means that you pay your bills on time. Just because you have a score that reflects that you pay your bills on time doesn't mean you can go get all kinds of credit and money. It just doesn't. What it means is that you've got 3 accounts reporting to DMB, you have a DUNS number, you paid those 3 accounts on time. That's all that means. But again, in order to get all these other tiers of credit, there's certain amount of trade lines you typically have to have. So for example, I can have 3 accounts that report to DMB, but I'm not going to go get an Office Depot account that needs at least 4 accounts in order to get approved. Okay, I need to have 4, 5, 6, 7, 8 accounts to get fleet credit, to get Office Depot, etc. So the number of accounts you have dictates your ability to move from tier to tier, not your actual credit score. Don't get me wrong. You want to pay your bills on time or early. The good score is very important to getting approved for the best terms and the most money. But the score isn't going to determine your ability to move to tier. The number of accounts you actually have will. And Nadarian from Texas, thanks for coming in. Quill doesn't ask for an EIN. Yeah, well, they typically are going to ask for a DUNS number from what I remember with Quill. So it doesn't really matter. They're trying to find your business. They're going to find your business from your EIN or DUNS, but I know Quill doesn't actually ask for an EIN. But Anita, thanks for coming in. Legacy, the best topic for today's climate. I appreciate that. And the Urban Exchange says, does Quill still require you make a few orders before you get invoice options? They do. And if you look at Quill, for example, we've now moved Quill a long time ago. So again, the nice thing is that our clients, when we find updated information, like Quill made some serious changes, we no longer consider Quill to be a starter vendor anymore. Okay, we've actually moved Quill, I think, to a tier 2 or a tier 3 vendor now. So yeah, we even moved Quill to a tier 3 vendor. So we actually had them as a tier 1 starter vendor. And because their approval requirements have changed, we've now moved them to, I'm pretty sure, a tier 3 vendor. I'll have to do a little bit more research. But yes, to answer your question, they absolutely do. Quill now actually has several requirements where they want you to place orders first. They want you to have accounts reporting to Dun & Bradstreet first. So they had a lot of different changes, which moved them out of a starter vendor range for us and move them to a later tier. We've got so many accounts to go through. It's impossible to figure that out now. But the answer to your question, yes, Quill does have a lot of requirements have changed. That's why we don't really use Quill as a starter vendor or recommend them anymore. So business credit's built the same way as personal credit. A lot of people think this, but it's a completely different process. Okay, secured credit cards don't really exist in the business world, for one. Vehicle financing happens after you build your credit. You can usually use that pretty early into consumer credit building. There's no starter vehicle financing options available like you can get in the consumer credit world. Okay, so business credit is built kind of similar, where you don't have any credit. You go get credit with people that report. You use the credit. You pay the bill. It reports. In that facet, it is similar. But it's also very different. There is no secure credit cards. We've got vendor accounts that we use in the business world that have net 15, net 30, net 60 terms, which we don't see in the consumer world. Vehicle financing, we get later in the process when it comes to actually building business credit than consumer credit. Consumer credit, you can get these very small limit $500 credit cards, Visa, MasterCard, pretty early in the process. In the commercial world, you don't get Visa, MasterCard till later in the process. So two completely different processes between consumer and commercial credit. Another misconception is business credit's only good for net credit accounts. Well, this is how you start building business credit. But the reality is, at a very short period of time, if you're doing this correctly, 60 days or so, you start moving to revolving credit. You start being able to make it easier to qualify for installment loans. So you do get net accounts to build credit initially, but then you move the vendor revolving credit cards and revolving accounts financing within about 60 days into the process. And eventually your business credit will make it easier to get loans, lines of credit as well. So now we've talked about some of the misconceptions. Let's talk about the wrong way to do this. Let's talk about all the shortcuts that you've been sold, that people are trying to sell you on, and what actually legitimately happens here if you choose one of these shortcuts. And now Urban Exchange says, oh, no wonder. Yeah, I need that updated list. Yeah, that's the problem. Look, and Urban Exchange brings up a good point. I can give you all kinds of free information. There's a reason I don't show you vendors and produce vendor lists. Our data team literally updates data daily. So what happens is what you heard from Quill yesterday is different than today. And if you're not keeping up consistently with this information, it changes. And when we used to put the information in space, everybody would get upset because it would change over time. So you got to keep an eye on this, because again, your ability to go through the business credit building process quickly is all about quality of information. And if you go to Facebook groups and forums and listen to other novices, the quality of information isn't good. So you oftentimes go down a road, get a Quill, start buying stuff only to realize it doesn't report, and you've wasted a lot of time and money. So having that quality of information is very important, because it's changing on a dime very, very quickly as well. So there are no shortcuts. First thing to keep in mind when it really comes down to building business credit, okay, the top 3 shortcuts people try to take are buying trades, buying shelf corporations, or credit privacy numbers or CPN numbers. Getting caught in any of these things is really going to make it difficult on you, okay? So let's talk about all 3 of these, because I want you to have the actual facts. And by the way, what I'm about to show you is not my opinion. You're going to see, we're going to hear from the FBI. We're going to hear from many very credible organizations here on how they perceive these 3 things, because there are significant repercussions to you if you start to get trade lines added the wrong way. So I want to talk about all 3 of these. Let's talk about these piggybacking trade lines or buying trade lines, okay? This is basically going to somebody that hasn't seasoned trade lines and adding them to your credit account. So creditworthy accounts are basically from somebody else or added to your credit account. Here's the idea to boost your own credit profile, right? So the idea is that a creditworthy or a borrower adds a third party as an authorized user, but they don't actually have access to the credit. They're just actually adding the account to the credit report for the sake of adding credit history. Okay, this is why people do it. So the authorized user that they're adding, this could be you. Maybe you come in, you go buy a trade line from somebody else. You want to add it to your credit report. The idea is to convince lenders and credit issuers that's your trade line and that you deserve credit for it. But the reality is you don't even have access to use that account. Now, the benefit to the third party is obviously an artificially inflated credit rating. That's what the myth is that you're really trying to create. It tries to show that you're approved for higher limit accounts. In theory, showing you already have credit is supposed to make you more creditworthy. This is why people try to do these things. And many companies even claim to actually be able to get you $100,000 to $250,000 credit line with this. Okay. But I've never seen that happen. And I have this happen all the time. I have a lot of people come to me and say, hey, we can add trade lines on your client's credit report. And then we go and get them $100,000 credit line. And I say, that's awesome. Here's what I'd like. Give me 3 references from people I can speak to that actually went and got $100,000 credit line because they did this with you. Nobody's ever supplied me those references. And Credit Suite has a lot of clients we could refer them to. So they come and say, hey, we got a perfect thing for your clients. We can add trade lines. Then they can turn around and get $100,000 credit. And that sounds great. Why don't you show me proof of that? Let me talk to 3 people that actually succeeded, and then we'll take a next step. Just give me those 3 people. I never hear from them again. No company has ever produced actual real clients that have got the result they quote because it's BS. I've had friends that go through this against my advice. I'm like, that is a ripoff. Are you crazy? Do you really think you're going to add fake trade lines to your credit report and somehow fool the credit bureaus and fool the banks for them to give you a $100,000 credit line? Yeah, I think I'm going to do it. Okay, I'm telling you not to. It's a waste of your money. Go do it. They spend $5-10 grand on this process, and they never end up getting any result out of it. I've never today met anybody that's actually come out and got $100,000, any kind of credit line, because these fake trades were actually added. Now, business credit is tied to your business information. Doesn't show up on your business credit report, okay, when registered under another business. Vendor accounts do not have authorized users. Okay, underwriters can see AU accounts anyways, and credit cards can actually lower your scores because of someone else's usage as well. And one trade line can cost you as much as $2,000. So a lot of stuff to unpack here. First of all, buying these trade lines is expensive. It's thousands of dollars. Okay. The second thing is that a lot of vendor accounts and stuff don't even have AU accounts. They don't even have AU ability. And the stuff that does, underwriters already know what it is. They're not giving you credit for it because they know it's not yours. So there's no real benefit of buying these things because they don't actually help you. Now, here's a comment from the Federal Reserve itself. The FBI has found that trade line company can be a fake and the primary cardholder can be a stolen identity in these kind of scams. The potential distortions in credit scores that piggybacking credit may introduce suggest that a reconsideration of existing regulations, industry practices, or both may be warranted to preserve the predictiveness of credit scoring models, create credit where none is due, authorized user account stating a payback. And this actually comes right here from the Federal Reserve. The bottom line is the Federal Reserve is saying, hey, look, there's problems here. A lot of the trade lines you might even be getting aren't even yours. They're actually coming from somebody else where it's actually a stolen identity, which is very common with these types of actual programs. And they're also saying, look, everybody needs to consider how we're doing this in the lending area so these kind of things aren't creating this inflated credit profile that's not even legitimate. Now, here's the FBI. When commenting on a 2013 bust of a fraud ring, quote, a second kind of trade line is the authorized user trade line where a credit card holder adds another so-called authorized user to a credit card account. This raises the credit score of the authorized user, inherits some of the primary user's credit history. Some defendants created and sold fake lines of credit for false identities made up by other defendants. These fraudulent primary trade lines were then used to increase the credit limits on fraud accounts so that the defendants could recap even larger profits. Defendants use the authorized user trade lines also to create new identities. So, and the leader of the scam ring was sentenced to 80 months in prison in 2016. So a lot of things are happening here. First of all, what's happening is the government is coming in and everybody says the same thing is that, look, these authorized user accounts in the consumer world, by the way, I'm talking about commercial world, not consumer. In the consumer world, they're not a bad thing. They're not. I mean, did it for my kids. My kids are 10 and 12. And if you look at their credit, they have 700 credit scores. And they did it because before they changed their policy on this, I added them as an authorized user to my credit cards. Now they got the benefit of that. They have credit history. They have high credit limits. They have years of credit history, and they established 700 credit scores as a result of that. But here's the thing. The thing is that in the business world, it's just different. Okay, AU accounts, authorized user accounts, are very uncommon in this world. And when we see them on credit reports, just the fact that they're there throws up a red flag. The other problem is that who are you getting these from? The idea is that you go get a trade line from a company that's having somebody else actually give you the authority to add you as an authorized user. Do you know the company? Do you know the person that's adding you as an authorized user? If you don't, how do you know that's a real person? How do you know they've given the company the authority to have you added as an authorized user? Because in a lot of the cases where the FBI and the government has investigated these, that's what they found. The companies selling these trade lines didn't even have the authority to sell the trade lines to begin with. They're stealing people's identity, then using those identity to sell these trade lines. Here's the problem. If you add this and you buy this and you add these trade lines to your account, guess who's liable for that? Guess who's liable for the actual identity theft that's taking place? You are. It makes sense there's a company in between, but you're the one paying to add a stolen trade line to your actual credit report. So this isn't just for me. These are FBI comments we've heard so far from 2 government agencies that have commented on exactly the same thing. But let's talk about FICO. Let's talk about the bureaus. Okay, FICO says a shadier version of piggybacking has been promoted by some CROs who offered to rent to their credit challenged customers the trade lines of established account holders in an effort to boost their customers' credit profiles and scores. Here's Equifax. Authorized users abuse occurs when low-risk primary cardholders rent their trade lines with extensive credit histories, high credit limits, and solid repayment profiles to others, most times knowingly to fraudsters. Experience says buying trade lines may be viewed as a deceptive by lenders and credit reporting agencies and could even put you in danger of committing bank fraud. If you pay money to improve your credit scores without doing any of the work or even getting a card to use, you could be falsely representing your credit worth to potential lenders. Okay, so again, I told you today, this isn't my opinion. We've heard from 2 government agencies. We've heard from FICO, Equifax, Experian as well. And this is some pretty sinister language here. I mean, not sinister is probably not the word, but serious language. So let's look at this wording again. You could be falsely representing your creditworthiness to potential lenders. Isn't that fraud? And that's the problem with this is really being conceived as almost, if not fraud, because you're actually adding fake trade lines to your credit report to try to convince lenders and credit issuers to give you money. You're defrauding the system. I mean, it's pretty much almost by design defrauding the system. And that's what Experian is saying here is, look, you have real danger of committing bank fraud here. Because what you're ultimately doing is you are falsely representing your creditworthiness to potential lenders. And so what happens is if you come in, you all of a sudden get a fake trade line, you get credit accounts, you default on those, there's a good chance those banks can come in and come after you for fraud because they issued you money based on fake trade lines that weren't even yours. And so again, this is the perception from the bureaus. This is the perception from FICO. This is the perception from the government as well. And by the way, I want to note, I've learned in my time in this life that, if you're going against, and I've been in financial services for 2 decades, if you are going against what the FICO, the credit bureaus, the FBI, the FTC, all the government agencies say to do, you got problems. Because I don't want to be the one to like break the secret, but they're pretty smart. Banks are susceptible to fraud all the time. 80% of applications banks get aren't even real. So their fraud detection services are well beyond what you and I even comprehend and understand. And I sat on a very long flight out of country, and I sat beside a guy. I said, what do you do? He said, I deal with credit risk solutions for a bank. I'm like, this is going to be the best flight ever. I have like 700 questions for you on how you guys detect fraud. And it was a really interesting conversation. And what I learned is that we don't even understand the surface of how deep they dig to figure out what's legit and not. You're not going to fool the credit bureaus. You're not going to fool Bank of America. You're not going to go buy fake trades, add them to your credit profile, and DNB is like, oh, I didn't see that coming. And Bank of America is like, oh, you got me. It doesn't work that way. They're so much smarter than we are that they know what we're doing. And the minute that they know what you're doing, it creates all kinds of problems because, again, as you're seeing here, it really is borderline potential fraud, and it will catch up to you. So sooner or later, what happens is the bureaus realize that you're doing this. And what happens is they start by red flagging your credit profile. And that tells anybody that looks at your business credit reports that there is potential fraud and problems happening. I know this because one of our clients, Christine, who secured over $1 million of business credit, had this happen. A trade line company solicited her. She never even bought the trade lines. They put an inquiry on her credit report. Because they put an inquiry on her credit report, she was red flagged as dealing with a potential fraudulent company. So all of a sudden, she had this red flag warning she's trying to remove. She didn't even buy trade lines. They contacted her and solicited her, and they put an inquiry on the credit report just because an inquiry took place by a company that deals with these kind of accounts. Okay, so the second thing is that they just shut down the bureau. They actually just shut down the report. So they will shut down the actual credit report and freeze it. The entire credit profile is non-existent. Okay, so that means that if you have one fake trade line, years later they figure it out and you have 15 real ones, boom, your credit profile is gone. You lose whatever you gained, you start over. People solicit us all the time for this. Hey, DNB shut down my credit profile. It's gone. I went to pull my credit. It's not there anymore. And we say, did you buy trade lines? And they say, yes. Then what do I do to fix it? You don't. You start over. They figured you out. They found out what you did, and now it's over. You start over a credit profile all from scratch, probably want to set up a new business to begin with. So, and again, what's frustrating is the people that do this have years of positive credit history, and that one trade line sometimes take place years before, and now all of a sudden their entire credit profile is shut down and they have to start over. We see it all the time. And that's actually what happens because DNB's methodologies just boom, shut it down. And they know who these authorized users are. They know the accounts that offer them. They know the people that are issuing or actually giving authorized user accounts. So that's how they actually, some of the information of how they're actually figuring that out. Okay. And Barbara says, how can I get a list of the tiers for business credit? You really don't. We don't publish anything with tiers because we move accounts in and out so much. But I do talk a lot about tiers and the different tiers I will show you. But the way that we tier credit for our clients is different than anything I teach because so many accounts come in and out of those tiers. I kind of teach it just to go in between starter vendor, move to retail credit or store credit cards, move to vendor or move to fleet credit, then move to cash credit. So I talk about the type of credit you should move between, but not tiers because tiers is really source related and it's too hard to teach because it changes so much. And Cassandra says, why? Tell me more about your why question of what I just said that you want to know why, and I'll tell you more. Mike says, what's up, Ty? Been between meetings now. I want to say hi. Hello, Mike. Thanks for tuning in. So years later, when a company is known to have a trade line, they just shut it down. There's no statute of limitations. Your credit profile is gone. It's what we're trying to prevent. Let's talk about shelf corporations. These are basically an entity you buy, you put it on the shelf for the whole purpose of seizing the entity. There's no credit history. There's no bank account. The idea here is that by getting a shelf corporation, people believe that you're able to come in and you're able to basically buy an entity with all of this age behind it and then make it easier to build business credit. So let's talk about this. First of all, shelf corporations used to have a pretty good purpose. It used to be before we could actually set up entities online that you had to go through a process. It could take you months to set up a new entity. And so if I'm a business and I want to bid on a government contract, then I don't want to wait months to do so. I want to take action right now. And the only way you could do that was to get a corporation that was already set up. So it used to have a very valid purpose. But nowadays, you can go online with any Secretary of State and set up an entity within minutes. It's very simple, easy, and cheap to be able to do. And with that, there is no purpose to buy shelf corporations that are aged. People think that because you buy one that's a year old, 2 years old, 3 years, 5 years old, that it's easier to build business credit because now you're building business with a 5-year-old company. But what you don't know is that what happens is the credit bureaus, when an ownership changes, I own Credit Suite. Let's say I sell Credit Suite, somebody else buys it, and there's an ownership change. The credit bureaus know that because they tie in with Secretary of State records. They know the ownership changes. they immediately do what's called re-aging the credit profile. They treat the actual business as a new business. They put alerts on the credit profile. They put right there the ownership interest is changed. They re-age the credit profile and they treat it as a new business. So buying shelf corporations is 100% pointless, because if you think you're buying a 3-year history, you're not, because the minute you take ownership, it re-ages it, and the credit bureaus on the commercial side treat it as a new business. And then lenders and credit issuers also do the same, because they see the actual notices on the credit profile that it's been re-aged. So again, this is a complete waste of money, because what you're trying to do immediately gets undone the minute the credit bureaus know the business exists, or the minute the business, they know that the ownership interest has changed, which they'll always know because they find out from Secretary of State. Now, here's the other thing, CPN, okay, credit privacy numbers. People try to shortcut the system with CPNs, okay? Credit privacy numbers, a 9-digit number, looks like a social. They are for consumers, not businesses. They're not a replacement for your credit. They're not an a replacement for anything else. So let's talk about what a CPN number is. First of all, there is a legitimate purpose. Credit privacy numbers do legitimately exist for people that demand extreme privacy. Let's talk about senators. Let's talk about presidents. Let's talk about congressmen. Let's talk about, people that are very high authority people that actually need some kind of credit protection. They got to protect themselves more than you and I do, right? Like their identity getting stolen of a senator is significant, or a president is a significant threat. That's a significant risk. So there are CPN numbers that are created for cases with people that are in witness protection or people that really need extreme privacy. But the reality is that you can't use any number other than your social security number on applications for credit or financing. You can't. It's illegal. I'm not an attorney. This isn't legal advice, but here's what happens. It's illegal to misrepresent your social security number. You can't do that. And it's also fraud if you're entering something else in place of your social when it's not really your social. You're actually committing 2 felonies if you put anything in a social security number field other than your social security number. Now, here's the other question. Have you ever in your life, of all the applications you filled out for credit cards, for loans, for everything you've ever filled out, have you ever seen a space for a CPN number? Ever? Have you ever seen credit privacy number enter here? No, you haven't. Doesn't exist. So when you have an application, the minute it asks for a social, the minute you put anything else in place of that social, you're committing 2 felonies. I'm not an attorney, not legal advice. You can look into it on your own. There's 2 felonies you commit at this point. So a CPN has no purpose. There's nobody that asks for a CPN. It's not recognized by the credit bureaus. It's not recognized by lenders and credit issuers. The only way you could ever use it is to put it in a social field, which at that point, you're immediately committing multiple felonies. So lenders and CRAs, they all know this. And again, if you want more information, go to youtube.com/credit suite. Look for CPN. Look for buying trade lines. Look for buying, and coming in and being able to get these kind of accounts, which are shelf corporations. Look for that. I do extensive 1-hour training on all of this, so you understand, not just from my perspective. I give quotes from the bureaus on each one of these trainings. I give quotes from the FBI, the FTC, Department of Revenue. I have all these quotes on there so you can see what the credit bureaus, organizations, what all of them are looking at. The bottom line is there's no shortcuts here. The bureaus know what you're doing. Lenders and credit issuers know what you're doing. They know what you're trying to do. You lose a lot of credibility the minute you try to do it. And if you get caught, there's all kinds of serious repercussions. You can do some basic research and see all kinds of people that pay very massive fines and prison time for doing the kind of things today that I'm trying to help you avoid doing. Barbara says, that's perfect. That's exactly what I'm looking for. Awesome. And Jacob says, great nuggets as always, guys. I appreciate that. Thank you very much. What type of credit lines are available? Well, here's the type of credit that is available. Let's talk about fleet credit. Net terms, oftentimes you can get up to revolving terms. You can get fuel for vehicles, repair vehicles, maintenance of vehicles, anything to do with carrying a fleet of vehicles, fleet credit can help you with. Retail credit. This comes from retailers, Staples, Amazon, Office Max, Office Depot, almost every kind of retailer, Nordstrom, Macy's, they all offer these kind of actual trade lines. Okay, these credit cards can help you build your business and build business credit. And again, all the stuff that you mainly need, you can get from Walmart, Amazon, Office Depot. Most of the stuff we need to run a business, we can get from these kind of accounts. By the way, if you're just getting here, tell me where you're from. I always like to see where you're actually tuning in from. And if you're getting value, make sure you like and subscribe so we can get more entrepreneurs in here and help more. Okay, business credit cards. These are Visa card, MasterCard, or American Express, Discover. These are used universally. I can use them almost anywhere that those credit cards are accepted. This is another kind of real trade line you can add to your credit report. So we've talked about retail credit. We've talked about starter vendors. We've talked about fleet credit. We've talked about business credit cards as well. All of these can be added as legitimate trade lines to your business credit profile as well. So big takeaway, slow is smooth, smooth is fast. Take your time, do it the right way, skip the shortcuts. Buying trade lines doesn't work. Shelf corporations don't work. CPNs don't work. But let me give you a tip. You don't need any of that stuff. If you just follow what I'm teaching here, you could build your fundability and get it right in a week. You could start getting starter vendors the same week. They report in 30 days, a month into this process. And I'm going to say 2 months just to give us some leeway. You're moving on to retail credit. You're getting Amazon. You're getting Walmart. You're getting, Staples, Office Depot, Home Depot, Lowe's, Best Buy, all that stuff, Apple. You're getting that 2 months into the process. Then you can get fleet credit the next round. Another month later, you can start to get fleet credit. Then you can get auto financing, Visa card, MasterCard. 4 to 6 months of this process is where our clients get there, doing it the right way. So the shortcuts are going to create all kinds of issues and get your credit profile shut down, but you don't need to, because if you do it the right way, it's just as easy and fast to succeed. Next time that we meet, we're going to talk about 4 keys to getting auto financing without a personal guarantee and credit check. We're talking about the companies that actually offer that. We're going to talk about how you can even get financing for automobiles through SBA, as well as heavy equipment, many other types of things to make sure that you can get vehicles moving forward in your business name. Let me tell you, I buy vehicles in my LLC name, not an LLC. I have an LLC for every vehicle I own. You might say, why do I do that? Because I rent all my vehicles. I rent my vehicles when I'm not using them. It is very profitable, highly profitable. I don't know if I'll ever teach on that, but I can tell you that you can run a 7-figure business just taking the assets you own and renting them. It's mind-blowing. I never actually realized this until I got into it years ago. So I have a separate LLC for every vehicle and property I own. I do it for asset protection purposes. So we're going to talk about how you can do this on our next training, which will actually take place tomorrow, how you can get this auto financing without the personal guarantee or credit check. And if you need help, make sure you grab our free guide, creditsuite.com/live. That will actually get you access to a step-by-step business credit building guide that's been downloaded over 1 million times. So let me just, I feel confident in saying it's the most popular guide that's ever been downloaded on business credit. I don't think anything else out there has been downloaded over 1 million times. So make sure you grab that resource. And don't forget, funding30challenge.com. You want money for your business? There's only one place to be. The event's free. It's worth $1,000 your ticket, but you can get in for free. Takes place July 19th. It's in about a week and a half. And if you come to Funding 30 Challenge, we've got over 20 of the world's top funding experts come in and teach us how to get money, what kind of programs are out there, and they introduce 30 different kind of funding products, of which we want you to walk away with at least 3 that you can get approved for right now. We're going to have people there representing and teaching grants. We have angel investors there. Venture capitalists are going to be there. Crowdfunders are going to be there. We're going to have tons of private investors there, all with one intention to help you get money. And ultimately, what happens here is it's basically a flash mob for people that want money. We get together, we create an impromptu group on Facebook. Thousands and thousands of people will end up joining the group. Okay, and then what happens is then we go live and everybody in that group has one purpose and one purpose only, and that's to help get money. Everybody's there to walk away with money and learn about the best ways to get money. Here's what it looks like. When you go to funding30challenge.com, you can get in for free. Now, don't get me wrong. There is an option where you can spend like $95 to get the recordings, get backstage access. It's pretty cool. Okay, but if you don't want that, you don't need it. You come in, you fill out this simple form right here, just some basic information, and then you go to a point where you can join the actual action. Now, keep in mind, funding30challenge.com, you're going to see testimonials all over here. You're going to see real results from our March funding challenge where everybody got all kinds of actual approvals. Okay, you're going to see several. You'll see a lot of the people that are actually going to be speaking at the event on our main page as well. And you'll also be able to see, again, a ton of actual approvals. So when you go to funding30challenge.com and you register, you get on the next page access to the Facebook group. You can already see what's happening in the group. Right now, everybody is coming in the group and introducing themselves, talking about their business, saying hello to one another, and then we all work together as a community to help each other get funding. It's never been done besides our one in March where we bring all the funding sources to you. I'm not just here to talk to you about getting money. I'm here to actually introduce the people that are the experts in the space that actually issue the money to you. They're here, and they'll actually help you get approved throughout the actual challenge. So if you want to join, it's 100% free. All you have to do is go to funding30challenge.com. You fill out the form, you go to join the group on the next page, and we start streaming at 1 o'clock on the 19th. By the way, we give away about $400 to $500 worth of cash giveaways every single day. And at the end of the challenge, we have one big bonus we give away that's typically worth over $8,000. Our winner last time was amazing. She was awesome through the challenge. Okay, so if you want to learn more about getting money for your business, give us a call. 877-600-2487, 877-600-2487. Okay, on this consultation call, we'll do a fundability assessment to figure out what's jacked up and wrong with your fundability, help you fix it to be able to qualify for more money. We'll get your business credit reports with Dun & Bradstreet, Equifax, Experian for free, no cost. They're $250 if you go to the bureaus. We get them for you for free. We go over them with you. We give you tips and tactics to build your business credit and portfolio the right way. Then we also do a funding assessment. We tell you all the loans and credit lines you can get right now. Consultation is 100% free. You give us a call, 877-600-2487, email us info@creditsuite.com, or set up your time yourself at creditsuite.com/console. And if you got value, make sure you like and subscribe and get notified when we go live again and with more training on how to get money to start and grow your business. And on Twitter, Facebook, and Instagram, we have daily tips that we release. Literally thousands of videos on our YouTube channel that can help you as well. Okay. And we also have a podcast called the Business Credit Finance Show where I bring in experts that teach you everything from branding a business, starting a business, exiting the business for maximum value, making your business profitable. Actually, the nuts and bolts of running a business is only on my podcast, the Business Credit Financing Show. All of those links you can access at the top right of our page, creditsuite.com. So make sure you grab access to those as well. And Naomi says, I just learned so much. Perfect. And wait till you see what we go through in the funding challenge. It's going to be powerful, as well as our next training where we talk about auto financing. And Zena says approvals based on if you already have some business credit established. Yes. Business credit building is all about establishing credit and then moving to the next tier and the next tier and the next tier. And each tier has sources that will approve you. So if you have 3 trade lines on your credit report, then there are sources that will approve you without a personal guarantee and credit check just because you have 3. Then there's other sources that will approve you because you have 5. Others that will approve you because you have 8, etc. So building business credit is all about adding more trade lines, and the more trade lines you have, the more credit you can get. When you have about 14 trade lines, you're able to get auto financing, which we'll be diving into and talking about next week as well. Jacob says, hey, I'm a partner looking for a way to clean up business credit. We can do that as well. All you have to do is get with your advisor team. If you go into your back office and Suite Login to the contact us, get with your advisor team. Your advisor team can help you with fixing business credit. That's part of what we actually go through. California, thanks for tuning in. See, Alan, thanks for coming in. Zena from Houston, what's up? Thanks for tuning in as well. And hopefully a couple of you that had sound issues got them resolved, because I fixed my sound issues finally. Had issues yesterday, figured out what caused it, and my new computer is now working good with a good sound. So I look forward to seeing you in our next training tomorrow, which is Thursday, July 7th. We'll be talking about auto financing, how to get approved without a personal guarantee and credit check, and how to get approved where it actually can report to the Business Credit Reporting Agency. So we'll be diving into that tomorrow. Don't forget to give us a call for your free consultation. And don't forget, most important, to go to funding30challenge.com and register. This is going to be an event like you've never seen before. I can tell you this. In all my time of running businesses, decades of running businesses, the favorite thing I've ever done in my life is that for business. That's it. It was the coolest experience I ever had was our March funding challenge. A lot of people still commented months after and said the same thing. And I can't tell you how excited I am for this. So if you want an impromptu group of business owners that's all dedicated to getting each other money, and 20 of the world's top funding experts to come in and teach you this stuff, not me, I'm not teaching. I'm just emceeing. I'm bringing in all the experts that I learned from, that teach me business credit, that teach me fundability, that teach me grants. I brought all of them in. Okay. And they're going to reveal over 30 ways that you can get funding for your business. It happens in one place, July 19th, funding30challenge.com. Hey, George, thanks for coming in as well. So thank you very much for tuning in. I look forward to seeing you on our next training where we talk about more cool ways to get money to start and grow your business.